Hello friends, welcome back in this quick presentation. This is review of ES chart. We have been following for whole year all the predictions, highs and lows. Last time we checked here on this market and we said market is going here. It's very hard to see when you're sitting here, market is sitting here and making the projections that this is a single circuit vibration of the market moves, and doubling circuit is going to be here, and there it is. It didn't take too much time. All right, so here we are, and now it's always good to now this is the value of the market, true value of the market line you can see here, and then we have a bunch of VWAPs, multi-day VWAPs, giving us the bias direction. Now if you look at the market maker move, the way we like to see is how far have you moved across from this true value of the market. We are still in bullish mode. Pullbacks are here. This was the balance point, and market took off, and it pulls off here, but still. So let's do some quick one, not to waste too much time. So once you find the market value line, you can use multi-month VWAP, multi-week VWAP, multi-day VWAP. You can see the market is extending on the top side, reflection from the mean on both sides, right? That's what we're doing. So when market is going up and up and up, this is the highest peak it reached, and we measure it, and we just keep this on this line on the other side, and market is flipping on the other side, right? We're not gonna do too much. We can just say, okay, this is the highest peak. What is the probability of market reaching there? That's what the inflection point is. That is what the measured move is from the true market value. And it's very hard for people to understand this, even though market is making higher highs on the VWAP. Now this is a multi-day VWAP, single day VWAP. There are a bunch of VWAPs going on here. You can't see them. Pullback, pullback, pullback is blew up. Now we are just going parabolic with the Santa rally. All right, so that is one measurement. Second measurement we want to make is of bigger cycles. So let's do that as well. If you look at this measured move from here, 57.20, if it comes down here, if this is going to be unleash of the golden era in American society, which is the lowest tipping point is here, right, where it somewhere here. All right, so if I keep doing this, 6100 area is there. Let's mark it, and it's going to double that. I can see if we double the circuit from here to here, and there it is. And that's what we do, unless the market tips over 62.75. Unless market tips over on the other side, just like here, pull back to this. So market wants to rally. What can we do about it? Just join the fun. All right. So you can see how this is how we have been getting all the measurements, doubling circuits, this circuit, that circuit. There we go. So this is all going on for years and years. So just have to find out a way to trust it. So the lines are posted here, so is the value. Now this is based on this impulse, and based on this impulse we are looking at this genetic. Now the other issues, we can look into this. If I look at this, support, 1 touch, 2 touch, 3rd touch, break, retest on the other side. We talk about it, break and retest on the other side. And we place the Mandela here on this height from here to the breakout height. What are we looking at? We are looking at market is vibrating, and this levels is coming down to same area. So let's do one thing. Let's put a block here, right? Makes sense to put a block here. And on the pullback we have this area as well, which is, we already have the line here, so let's not get too much clustering. So this is where we are heading. Now there will be a pullback, rotation, and eventually we're gonna hit here, make a new high, and there it goes. And if you see this oscillator, it is also just like here, it took off, gave you a pullback reaction because the pressure is high, as seen by the green line. This is a pullback, and this is a pullback. Market is going sideways. When the things pull back down in the oscillations and market is going sideways, it is going to blow on the other side. And that is how we talk about it. This pressure is there, market pull back into this pressure. On VWAP we got it. Now these are 100-point moves, good for swing trading. This is not intraday chart. This is looking at the market value, where the big swings and the big direction is being dictated. So this is typically, you will be able to, now if the white is above the red, it has been, this was the balance point. It is a very slow line, crossover, right? These things will work on this crossing over the direction by, see above this line, this long only. When you're doing long only, where do we trade? Pressure is high, balance point long. This is all long area, long area, long area. When it comes down, this is all long area. Now this is like grilling and grilling and grilling, and then finally it goes to the measured move and it takes down. But these are the best buys, right? These are the best buys. Think about, if you know how to trade VWAP, value. This is the value line, so trade at value. You want to buy here or you want to buy here? That's the value, right? Buy low, sell high. You want to sell here or you want to sell here? You want to sell here or you want to sell here, right? Same thing. This is what the VWAP is all about, the rotational value and how off the market is. This is where it is coiling. It coils up and down, it coils. It will just have a rhythm change. Not to mention, we have the beautiful modified Schiff, right? If you look at the modified Schiff, it gives you the direction also, A, B, and C. Okay, so let me get rid of this. So too many lines. Okay, so what else can we do with this modified Schiff, right? If you got this right, ABC, what does that mean? That we can see market is going to rotate across this mean. It's going to spiral across this mean. Now it is traveling on the lower channel, but it is like grinding and is moving. Okay, what else can we do with this channel? This is the handle width. Okay, this software doesn't have that. Okay, no worries. We can just do this this way. this is the, from this center point of A and B, we project this vertical association and we generate cycles out of this. I think in 2015, I think we made some videos to see if the cycles are coming up or not properly, right? So this is also telling us where market is heading. There's so many applications of this. Now, how we do it a little bit professionally and differently. Let me say, if you have the planetary cycles, or you freeze the dimension of time, for example, we don't want to. We're using 36 Renko bars here, right? Trying to freeze the time, but there's a more effective freezing of time where we say unless the energy of the celestial bodies move the market certain degrees, we don't move the price, right? That gives an unrealistic timing. But in the poor man show business, this is what we can do, right? Look at this handle. This is going to tell you the market is going to take off a little bit here. From here, it is just giving us the cycle turn times. You can see, right? That's roughly. Now this, but ultimately you can start with just the shift. Now, one thing we always talk about is you don't have to force just precision in terms of, you can curve fit the channel as long as it is rotating across the mean. So if I have A and B done here properly, right here, right, I can curve fit the center point. The A, let me get rid of this. Okay, so my A, B, A, B and C is going on here. Okay, what I'm doing is I'm saying I'm gonna, in the same slope, I'm gonna adjust this so I can fit one of the center point here. Now you can see market is rotating between this channel. It's broken the channel, now it is rotating on the other side. So this is an alternate way of doing it. So here we are where we wanted it to be, and now this is where we're heading. Now if our market pulls back on the other side, so we should always have the other side phenomena. So this is the top. I think we had it here already. Actually, what is this one? So this is the top on this side, it flipped on the other side. Okay, I mean, that is already consumed. So as far as market rotation is concerned, so this is our rotation. If it flips on the other side, let's assume that we are traveling and traveling and traveling, it's going to catch up eventually, it'll come back eventually. Either this will go up or this will come down. As you can see, this moves very slowly. It is normally going to come up. You'll not see this flying off, right? This is by design. So okay, so let's assume this is where the market is going to go, or it's going to go here. It'll catch up slowly, center rally. So pullbacks might come here, right? So we don't know that yet because we don't know where this is going to cross. When it does, this on the other side is going to flip on the other side. So if I just keep it where it is right now, we're heading here. This might tip like this. So this is what we are trying to guess. We are trying to guess smartly because market is mean reverting, and you find the reverter right here, inverter, reverter, and coiling rotation converter, right? Ultimately is called VWAP, but we have modified the VWAP to show smooth banking, how we use it in the bank when we were there, some algos we generate differently. Okay, so here we are, my friends, on this. Not to waste too much time, yes, again 15:06, we gotta go, and hopefully you can keep an eye on this and you can do your own measured moves, right? Keep an eye on this. Other things you can also do is simpler is impulses, right? Impulse. It is kind of the same concept. Let's draw it, right? Market is going up when it's making a big leg move. This is the impulse, anti-impulse, right? So let's make it different color, maybe make it huge, fat. All right, so in the trend, this is the impulse distance, right? Pullback. So same thing, we can do it here, right? Roughly, this is again all rough estimates. If this is my impulse height, we're expecting, when market is going here and is pulling down. Now don't look at this. This is the height. I'm measuring the height right here. From this top, this height from here to here, it impulsed here. See that? Boom. Okay, from here to here, this is a new impulse. It gave the impulse here. Let me mark it down. From here, the impulse was here. From here, as you can see, the impulse is showing somewhere here. These are rough estimates. This is all good to do it on things which has no unnecessary time moment. That's why all these things were created. At the same time, when market is moving on the impulse on the other side, if you just see it from here, big ones, right? So this is where the impulses are going. Now let's see. Again, this is now you're doing it from, this was my impulse. Market had a pullback from here. If I do it from here, where's market going? It is just going to the same location, roughly, right? Let's do it. There we go, right? Somewhere it is going 20 to 50, 20 to 75. This is just a poor man. Okay, that came back. Now the impulse came back. We already had this impulse. So from here it says, okay, if this is going to be the impulse, it's going to go here. So this is the simple thing. What is my pullback scenarios look like? Let's duplicate. This is how my pullbacks are looking like, right? Pullbacks are looking like this. So you can have 2-3 of these pullbacks, very strong ones, and 2-3 of the impulses. You can just get some ideas. Where is market going? Where is market going? So you don't have to panic. So if your market is going in this impulses, algos are riding you. Every time you have a pullback into this VWAPs, into the major banking line, you can buy more, right? That's what we do. And how do you buy it? There's so many ways. Tactical moves, how you want to hedge it. If you want to have $500 risk for 6 months and unlimited potential, you can do that. That's a tactical design of your strategy. So this is where we are heading. And every few months, since people are different, from here to here. Now let's do it a little bit better way, like this, right? From here to here, this was the height, so easy to see. So what happened? From here to here, you got a pullback, right? Right there. My friends, you guys are geniuses. Got it. From here to here, we measure the impulse. Okay, and then it's okay. It has broken and it's trying to come back. Pullback is here. And you know that 2-3 weeks in advance, so you can make your moves. And it is now perfect. So the rotation is going on in the market has some rhythm, easy rhythm. Let's do this properly. I know I was supposed to say goodbye. Well, universes move on, we continue. So we get some value of this, right? We are spending time together as friends of the universe. So there we go, impulse. So we got it from this. We say, hey, this is going on, it does. And okay, So this is where it is. So now if I say, okay, this impulse is going to potentially continue, now we can start guessing things, right? This is where we can do a smart guess. This is not a wild west guess. This is smart guess. If this is the market, impulse is happening on this side. So if market is going to come down from here, come down from here, and you start seeing this is making a sideways action and coming down, you know where it is going to come. So if market is going to rally to center levels, if it is going to come down from here slowly, this is going to be a pullback right here. Eventually it might take few months to pull back. You know, already know that we're going to buy. If you're going to start going down from here, maybe here it will go and a little bit pull back, maybe in January, maybe here pull back, it'll catch up. What does it tell you, right? So this is how we can have this measured moves. Look at the sides of the measured moves. It's going on for years. So you can just do it, and you can slow down the chart, make it faster, make it slower. Okay. Market made a move, and this time now here is one more thing, right? Now you see this impulse. Market went up, came down, strong impulse. We already had that at that time, and then we can say, okay, this impulse is rotational. Rough estimate, right? These impulses are also giving us the direction. This is how we got this direction. See that double? I just want to remind you. This impulse doubling from here, boom, boom. This is how we got the shot. Energy doubles. So this, I'm giving you some basic phenomena, so you can just take advantage of it. Now from here, now this is also impulse. Now this is the impulse. Now this is an anti-impulse, where it went, right? Look at this. And then what we did, why did we have this one? Same thing, right? We did it from this value area, this line, boom. This is a VWAP. So this was the lowest part of this VWAP. I took it from there, paused it, hit here. There we go. And you have all the access on the internet. Anti-impulse worked out here as well. Boom. Okay, now the frequencies will change, right? Frequencies will change. Market is gonna go in one frequency. Now this is an internal frequency. Let's say call it a baby frequency. Then we have a bigger frequencies. This is a big impulse, right? Huge impulse. We can do it from the market. We can do it from, let's do it from value, right? That's what we talk about. From this value, it is big impulse. Okay. This is rough estimates. Okay. So now what we're saying, if market is going on this side, now the height is one thing. We can measure the height from vertically. We can also measure this and say, okay, this is my impulse as well. How far the impulse has moved. And I put the impulse right here. What did I do? I plotted this line for you. Now you can see what I'm doing, right? And there we go. And it went there, reacted a little bit. And what did it react to? From the high to low, we were expecting it will come back here. Okay, so it was this impulse which picked up the top. So we are talking about having 3 impulses. Okay, that's it. So this was the impulse which we have from here. And do it properly, roughly. It's gonna be off by, it's like a rough estimate, right? Okay. Now from this top, if I double it here to here, now what did I do? Well, I went it from here. Why did I go from here? because it crossed below this line. So I placed this impulse, anti-impulse here, and gave you this idea market is going here. So now I'm just redoing it because this is a closure of 2024. You can keep doing for the rest of your life, right? Okay, so same thing. We had this impulse. So now probably I changed my impulse on this side. I can see I got a new measurement. I said, okay, we had this impulse. Now from this impulse, I got it from maybe somewhere. I got to check. So 3 impulses I keep. And we said, okay, if market is going here, it's coming back here, coming back there. So this is probability. This is just a probability. We put the lines there. It doesn't mean it gets there. So when we had this probability line from here, it went here. From here, we also said if market really pulls back, it will come down here. It did not come here. 55.50. It never reached there. Right? That's how it is. So this line is telling us something. Right? Pull back, pull back. So if you're buying stocks, if you're buying some spreads in the direction and long-term positional trading, this is going to help you. Multi-year, multi-generation wealth. You just keep on pick up your top 10 and keep investing. People invest 1 or 2 things. There may be sometimes they only just invest in 1 or 2 things, maybe one thing, like Oracle. People are investing in Oracle, and they had like $1 million when the Oracle was in 2000, $10. It has done 4 or 5 splits. So people are working since 1980. They had 5 or 6 splits in Oracle. They already are sitting at $1 million. Now you can see what has happened. 10x, $15-20 million. This is how it goes. So I think, but you have to make a commitment of 25 years, multi-generation, and it carries forward. Now in today's world, this is a scalper's world. Thank you very much. Thank you so much. Thank you very much. Thank you very much.